Everyone, welcome back. Thank you so much for enjoying the data migration course. In today's video, we are going to understand in more detail how to migrate transactional data. It is very important to understand the concept of migrating the transactional data. Whenever you do the migration of any client, you have to take very important decision, that is when your business is planning to go live. Either they want to go live in the beginning of the fiscal year or in the middle of the fiscal year, because based on this your whole data migration approach will be different. So in this particular scenario today, I am assuming that my client is going live in the beginning of the fiscal year, and in the middle of the fiscal year scenario I'll discuss during the asset balance upload time in more detail, right? So here my client are in this example, I am going to follow Jan to December fiscal year, and I am going live 1st January 2025, and cutoff date is 31st December 2024. What is called cutoff date? It means that till this date, whatever posting you have done in the legacy system should be migrated to S4 system, or this is the last date to use the legacy system. What is called go live date? Go live date is the date from this date you will be using the SAP system. Very simple. Now, whenever you go live in the beginning of the fiscal year, your profit and loss statement GL balances are not required to migrate. Straightforward, profit and loss statement balances, GL item balances are not required to migrate. Why? Because the profit and loss balances, whatever either profit or loss you are getting, that balances will be already shown in the return earning GL. This return earning GL will be shown in the balance sheet. So rather than migrating each and every GL balances to the P&L items, you show their differences into the return earning and you migrate the return earning balance. So very simple, when you go live in the beginning of the fiscal year, you are not going to migrate the P&L GL balances. You are going to only migrate the balance sheet. Very simple. Now in the balance sheet you have liabilities and you have assets. Now you have to categorize your whole balance sheet into minimum 6 items. One, you have to identify which are the account payable, point number 1, which are the account receivable, which are the GL open item, which are the GL balances. GL balances are last, which are the inventory balances, which are the asset balances. So you have to categorize all the balance sheet GLs into these 6 categories. Either it will be asset balance related GL, or it will be inventory related GL, or it will be the GL open item, or it will be vendor open items, or it will be customer open items. If it is nothing, then it will be the GL balance. Non-open item GL are known in a GL balance. Now let us see here. So this is the balance sheet. In this balance sheet, first focus on the account payable. So this is account payable. This is GL balance. GL balance means any GL which is non-open item managed. That is known as GL balance. This is also GL balance. This is vendor open items. This is reconciliation GL. Right? This is asset balance. This is inventory balance. This is GL balance because main bank will be non-open item management. This is open item GL balance. This is customer open item balance. This is again your GL balance, and this is again asset balance. So anything is an open item management. It means that line by line you have to migrate. For each accounting entry posted in the legacy system, that many accounting entry you have to post into the SAP system. So open item managed, either GL or customer or vendor must be migrated line by line. But anything is non-open item management, especially GL balances, that you can summarize based on the business agreement. You can summarize the value and you can post the aggregate journal entry. So that's the reason you need to be very clear that open item managed GL or vendor customer need to be migrated line by line. So now first let us focus on the vendor open items. So vendor open items, that is account payable. As you know, it is reconciliation GL. You cannot post any directly journal entry into the reconciliation GL. So how you post? You post via vendor number. So let's say this 30,000 balance is coming like this. In the legacy system, you have posted total 6 invoices. And these are the date you have posted in the legacy system. These are the vendor number, legacy vendor number. These are the document currency. These are the local currency amount. This is the payment term and this is the baseline date. Right? Why I have mentioned payment terms and baseline date? Because while migrating vendor open items, you have to identify which are the important fields should also be migrated from the legacy system to S4 system along with the amount. Obviously, amount is very important, balance is very important, value is very important, but other attributes of the journal entry is also very important, such as terms of payment, baseline date. Although it will pick from the vendor master, but if your line item terms of payment is different than your vendor master, then you have to focus on the line item rather than deriving from the vendor master. Now see here, vendor 1 you have posted credit this much. Vendor 1 you have posted debit 2000. Now for this you have to post one journal entry. For this you have to post another journal entry. Vendor, again same vendor, one more time you have posted. For this you have to post another journal entry. See, vendor 2 has debit and vendor 2 has credit. These two line item not required. You can nullify that. You can do the clearing. That's what called data cleansing. Before actually do the migration, you have to do the data cleansing. And vendor 3 has total 21,500. Sorry, you type here 21,500. Okay. And you can see here, you'll have total 30,000 balance. Now, when you migrate this, how will you migrate? See what journal entry will post. So, listen here very carefully. For this particular vendor is in credit. So what will post for this journal entry? See, you'll post like, okay, let me type here, data migration account. Let me put here debit. Let me put here credit. And what will be credit? To vendor. Vendor account credit. Why vendor account credit? Because this vendor is posted with credit line item. So this is the journal entry you have to post. This is in debit. This is debit. So vendor account will be debit. This is debit memo. Vendor account debit. Then data migration will be credit to data migration account credit. This is how you have to pass the journal entry. This is again into the credit. It is in credit. So vendor will be in credit and data migration will be in debit. Right? How much? 2,500. Document currency will be GBP, that is 30, and local currency will be 2,500. Now this two line item is not required to migrate. You can nullify them. Debit, credit, you can clear it in the legacy system itself. No need to migrate until and unless it is really required. Then migrate this value. You have vendor in credit. So same. Data migration will be debit and vendor will be in credit. See, like this. So if you migrate in this way, your vendor will become 30,000 credit. Right? It will be 30,000 credit. Let me type here amount, otherwise you'll understand. Let's see here. Let me type amount also here. So see here, data migration GL 8,000, vendor 8,000, right? If you want to put plus minus sign, you can put it. Then your vendor account become 2,000 and your data migration GL become 2,000. Here your data migration GL become 2,500 and minus 2,500. And your vendor here become, sorry, data migration GL become 21,500 minus 21,500. Like this, you are going to migrate. So if you see here, in summary, what you are doing, you have credit balance you have. So in summary, you are doing data migration. If you see this summary, ultimate journal entries, data migration, account debit to vendor account credit, 30,000. This is what final entry you are going to post. If you summarize all this line item, you will find this data migration 30,000 and vendor will get 30,000. But instead of posting one journal entry, you are posting multiple line items because line by line you have to migrate. So for open item, either vendor, customer, GL open item, line by line you have to migrate. So see here, either what I am saying is correct or not. So see here, I am telling data migration account will be 30,000. See here, 8,000. You can add also here 8,000. Put here 8,000 plus 2,500 plus this much minus data migration is there 2,000 minus that's it. So 30,000. That's what in overall data migration you are debiting 30,000. Similarly, vendor you are crediting 30,000. If you see here, see 8,000, 2,500, this much. How much it is coming? It is coming 32,000 and 2,000 you are reducing. So 30,000. So in overall, you are posting this impact. This is the final entry you are posting, right? But instead of posting single journal entry, you are posting multiple journal entry. Why? Because you may have multiple vendors and multiple vendors may have multiple line items. So for each line item, you have to pass the journal entry. but overall impact should be this much. So when you're checking the reconciliation GL in the balance sheet, you have to make sure that you are getting the 30,000 amount posted in the vendor reconciliation GL. No matter how many time you post, but overall impact should be 30,000 in the vendor reconciliation GL. And if vendor open item summation is not matching with the vendor reconciliation GL, that is where there is a discrepancies. You have to start investigating, right? So I hope you understand. Whenever you want to migrate open items, line by line you have to migrate, right? I hope you are clear. Now go to customer. So customer, this is the balance. Here also let's say total 6 invoices are posted, customer invoices, and these are the customer numbers. Same I have written here. Same journal entry you have to post here also. Now here debit, and here credit. See here your customer is in debit, so you have to put customer account debit. Then automatically data migration will become credit. Data migration account credit, right? Now your customer is in credit, so customer account put credit, customer account credit to customer account, to customer account. You can type which customer, customer 1 if you want to type. Similarly for vendor also, if you want to type here vendor 1, please type here vendor 1 account, right? This is also vendor 1 account because you will have different vendor number. This is also vendor 1 account, vendor 1 number, and this is vendor 3, vendor number 3. You can type like this, right? Because for each vendor you will be entering the vendor number. Now come to here. So similarly here customer 1 account debit to data migration account credit, customer 1 account credit and data migration GL account debit, data migration account debit. How much? 2,000 rupees. How much for this one? 8,000. Very simple. Now again customer is in debit. Which customer? Customer number 1. So put customer account debit to data migration account. This debit credit matching, so nullify it. Put here 17,500. Now this 2 line item not required. You can nullify it. Come to here, customer is in debit. So put customer account debit. Which customer number? Customer number 3. That's it. So overall, what journal entry will post? You have customer total balance this much. So overall, your customer account will be debited 20,000 and your data migration will be credited 20,000. So whenever all this data, this you posted, this you posted, this you posted, this you posted, you have to make sure that in your customer reconciliation GL you have 20,000 balance, right? If the moment your account receivable GL is not having 20,000 balance, it means that something you made wrong here while posting. Something you made wrong while posting. Because reconciliation GL balance is nothing but summation of each individual customer posting balance. So when you post, you have to make sure that this balance is matching when you posted individual journal entry. right? So here final journal entry, what you are going to post? Customer account. I mean, this is what the overall impact I am telling. Customer account will be debited and data migration will be credited. So when customer account will be debited by 20,000 and data migration will be credited by 20,000, right? This is the overall balance. Go to GL open items. In this whole balance sheet, you have this one GL open item. Bank incoming GL will be generally open item managed. I have purposefully put all the scenario so that you can understand. Now, any GL can be open item management. If any GL you are putting as an open item management, you have to migrate line by line. That's it. That is the difference. So here I have put bank incoming as an open item management. It means that there can be multiple line item posted to get this 10,000 balances, or it could be one line item also. But here, let's say I have posted this many line items. 6 entry total got posted to get the 10,000 balance. There again 7,500. Now you have to post line by line any GL which is created as an open item managed must be migrated line by line. That is the meaning of the open item management. So here for each line item you have to migrate the line by line. So let me copy this debit credit. So here bank incoming has debit balance. So put bank incoming account debit. Same data migration become credit. Very simple. To data migration account credit. Then your bank GL is in credit. Put bank GL in credit. Bank incoming to bank incoming account credit. Your data migration GL become debit. Account debit. How much? 2,000, 2,000. Here again your bank GL is in debit. Put bank account debit and data migration credit. Here debit credit is equal, you have to nullify it. You can nullify it because it is open item managed. So you can do clearing in the legacy system. Now this one, it is debit. So bank account debit, data migration become credit. Right? So overall, what you are loading? Overall, bank incoming you are loading is a debit 10,000 and data migration you are loading 10,000 credit. Overall balance. But rather than posting single journal entry, you are posting multiple journal entry. But overall impact, if you see here, your debit, overall bank GL will have 10,000 as a debit and data migration by default will become 10,000 in credit. So that is the final journal entry you are posting, no matter how many line items you are posting. But overall impact, bank incoming GL account debit 10,000 and data migration become credit 10,000. So when each line by line bank line items are posted, they should match this balance. They should match this balance 10,000. Now let us see the GL balance. How to upload GL balance? So in this balance sheet, if you see any GL, neither it is account receivable, account payable, inventory, asset, open item managed GL, then remaining GL is known as a GL balance. And you have to always load GL balance at last. In most of the data migration process, we upload GL balance at last. First we try to load customer, vendor, inventory, asset, GL open item. At last we load the GL balances. Can we identify in this balance sheet which are the GL could be the GL balance GL? Share capital is one, return earning is another, and investment is also GL balance because it is non-open item managed GL and main bank. So these are the GL or non-open item management. So what is so different between open item managed and non-open item managed? Non-open item managed GL or GL balance GL can be summarized and can be loaded. It completely depends on business requirement. Some business will tell, okay, you have share capital balance 300,000. Share in the liability side, no problem. I am giving one profit center. Post all this into one profit center. So what you will do? You will put share capital account credit 300,000 so and so profit center data migration GL account debit. One single journal entry balance loaded. But some businesses, some client will say no. I will not allow to load data at completely summarized level, at single line item level. They will tell we need little further bifurcation at multiple profit center level. Let's see what could be. It completely depends on business how they want the bifurcation. Assume that in the legacy system you have posted 6 line items. This is the GL, share capital GL. Share capital GL, and this is the balances you have. These are the journal entry you have posted in the legacy system. Now, do you think that for each line item you have to post one journal entry in SAP system as well? No. Then what? Then if you post for each line item one journal entry, then there is no difference between open item managed GL and non-open item managed GL. So what you can do, you can summarize the balance at least profit center level, meaning that for this profit center one you have line item this, and you have line item this, and you have line item this. So these three value you can sum and you can pass single journal entry. So if you see here, you have 200,000 minus then 20,000 positive, so it become 1,80,000 negative plus 78,000. So let's see how much value it is coming for PC1. For PC1 it is coming 200,000 minus positive 20,000 minus again 75,000. This much it is coming. This much coming for PC1. Similarly, say PC2. PC2 is here. Again, one more point you can consider. See here, PC1, this document currency is different. So again, you may have to upload for this separate line item. If you are going to consider document currency as well, and which in fact we most of the time we consider it. So you cannot summarize this again, because here document currency is different. If your business says no, you summarize. I don't bother about the document currency because I don't run foreign currency revaluation for them. If business says, then you can summarize this line item, and this line item. Otherwise, since document currency is different, you cannot summarize because this is INR. So it should be posted in INR document currency. These two only you can summarize because they are in USD and USD. So again, you have to discuss with the business what is their accounting principle says. Either it is legal, not legal, is there any compliance problem, not compliance problem. You have to understand with them. Personally, I will say upload for this one journal entry and for this another journal entry. So ultimately it will become like this. So PC1 will have total one this value and one this value. Total 2 journal entry you have to post. Total 2 journal entry you have to post. Similarly for PC2, if you see it is also in different currency. PC2, you see here, green and green. See PC2, you cannot summarize because document currency in GBP and it is in euro. So for this also you have to post one journal entry. For this also you have to post one journal entry. So ultimately you are able to summarize only these 2 line item, right? So you have to try to summarize in the GL balance. You try to summarize the value and you try to upload balance rather than going from line to line. So that is how you load the GL balance. So now here PC2 will be loading 45,000 minus 45,000 and PC2 local currency. This is little wrong, should be INR and this is also INR because my local currency is INR. So PC2 again you have 30,000 also minus 30,000 PC2 and PC3 you have 30,000, that is in positive. Make sure balance is matching total. So 300,000 it is coming. But rather than posting single journal entry, that share capital account credit 300,000 to and data migration account debit, rather than posting single journal entry, you are going to post these many journal entry. So this share capital account credit 180,000 and data migration account debit for profit center 1 and document currency will be accordingly. Share capital account credit and data migration account debit, that is for document currency INR. PC2 share capital account credit 45,000 data migration debit, share capital account credit data migration debit, share capital account debit here and data migration account credit. So total this many journal entry are going to post, right? I hope you are clear. So in GL balance you have to try to summarize as much as possible, try to summarize based on the criteria given by your client, your businesses. Again I am repeating, if business said that no, I need single line item, single journal entry, please post single journal entry, that is share capital account credit, data migration account debit. If you have activated document splitting, give default profit center. If you have not activated it, document splitting, even profit center also not required. If your business say that they bother about the document currency, then yes, you can summarize based on the document currency and profit center, 2 criteria. So here document currency and PC are same, so summarized into one journal entry. So I hope you are clear how to load the GL balances. Next I am going to inventory. So in this balance sheet I have inventory here 45,000. Now this inventory GL may have posting from different inventory number. Maybe I could have mapped different inventory GL, that also may be the reason, but assume that all these material numbers are linked to single inventory GL. So see here, total 4 journal entry, 4 journal entry were posted in the legacy system, and inventory GL balance is having this much value, 45,000. So legacy document number, date, these are the legacy material number, these are the quantity, okay, these are the document currency, these are the local currency. Plant and storage location is very important in inventory upload. You have to identify which material is having how much quantity at which plant and at which storage location. Because whenever you upload inventory balance, you upload at plant level, material level, company code level, and storage location level. In this you can do the summarization. Material level, you see here this laptop, see you can do the summarization of this one, because this material has same plant and same storage location, and this material got 2 times posted. 2 times got posted. One, it is minus quantity, okay. Once it is minus quantity. So rather than posting 2 times, you can post only 1 time. That is possible. That is possible. That is possible. So one summary also you can load, or line by line also you can load. It's completely up to business, how they want. How they want. Most of the time they do summarize wise. So see here, if I want to load this one, then I have 5 quantity positive and 2 quantity I have negative. So net how much? 3 positive I have. 3 quantity laptop is having 3 quantity positive. So I have to load inventory debit, because when your inventory is in positive, you have to upload inventory account debit to data migration account credit. That is the journal entry you have to pass. You have to pass laptop account debit to data migration GL. This is what you have to pass. You have to use movement type 561. When you choose the 561 movement type, it will hit your laptop account debit. Inventory will get debited, and data migration, it will pick in OBYC, GBB, BSA you have mapped. I'll discuss in more detail about this, that GL will get credited. Right? See here now mobile. Mobile is in negative. It is in negative. Now mobile doesn't have any other line item. So since it is in negative, mobile inventory is in negative, -7. So you have to put data migration in debit to mobile account credit. Mobile inventory number will get credited. And here movement type 562, because whenever you upload the inventory balances, you don't have control what to debit, what to credit, because based on the movement type, system will automatically debit and credit the GL. So the moment you select 562, system will automatically credit the inventory and debit the data migration GL, right? Similarly, if you see TB is in debit. So TB has debit inventory. How many quantity? 9. So you have to choose 561 movement type. The moment you choose 561, automatically your inventory will get debited. That is TB. TB will get debited and your data migration will get credited. So this is how you upload the inventory balance. In inventory balance, you will not get the exact figure. So sometime you have to do inventory value adjustment also post your upload. That I'll discuss in more detail during the inventory upload time. I hope you are clear. Last, let us see the asset balance upload. So have this much asset acquisition value and we have this much accumulated depreciation value in the legacy system. So let's say you have purchased this asset, same asset, just to make the scenario simple. One asset I purchased on this date worth of this much, and same asset I purchased again on 1st of July 2024, this much value. So if you see here, first time when I purchased 1st of January, so whole year I used the asset till 31st December, therefore 15,000 depreciation is deducted because I am following straight line method 10%. Second time when I purchased 1st of July, so till 6 months I charge the depreciation, that is 5,000. So total acquisition value 2,50,000 and accumulated depreciation 20,000 and net book value this much, right? So wherever you go live in the beginning of the fiscal year, you have to identify total APC value, purchase value, agent 31st December, and you have to identify agent 31st December how much total accumulated depreciation you have collected. Each asset wise, okay, each asset wise. I have taken only one asset, but similarly you can have multiple assets. So each asset wise, you have to identify the APC value and you have to identify total accumulated depreciation, and then you have to calculate the net book value. Then journal entry system will post like this. Your APC account debit, your two accumulated depreciation account credit, and the difference value. Let's say APC 2,50,000 and your accumulated depreciation is 20,000. Difference value system will automatically hit to the data migration GL. Data migration account 2,30,000 like this. So this is the journal entry system will generate. So you have to just, while filling the template, you have to fill APC value, you have to fill the accumulated depreciation value, each asset wise. Mind it, each asset wise you have to fill the data. Because here asset balances are loaded at the asset wise. So each asset wise you have to load the summary value. Summary APC value, summary accumulated depreciation value. If same asset you are going to load in the middle of the year scenario, if your business is going live in the mid of the year, then it is little more complex. That I will cover during actual asset data migration video. So this is the whole summary of your transactional data migration.